Hi guys, welcome to lesson 7 of my Trading 101 course. What is spread betting? If you haven't seen my other 6 lessons, I'd advise you to go to the first 6 before watching this one. And remember to like, subscribe, share, all that good stuff. Let's get straight into it. Hi guys, it's Annie, aka the Knock Trader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Knock Trader on all social media platforms. And if you check that description section below, you see a link to my mailing list and my Discord group, which is a chat room for all traders and investors to join. Now, in this video, I'm going to be talking to you about what is spread betting. So spread betting is all about speculating on the price movement of a financial instrument. You can place a bet per point movement on price to go either up or down, so you can make money either direction. Now, spread bet is not available in the American markets because it's considered gambling, but in the UK there's a lot of benefits to spread betting that I'll go through in the next slide. But before we go into the next slide, I just want to give you like a visual representation of what I mean when I talk about per point movement. So in this example here, we're talking about Tesco, and in this example, the person goes short with a stock of £5 per point. Now I've taken this example from the IG website, but yeah, just a little disclaimer here. So if you short, so we spoke about shorting before, which is about making money on the way down. If you short a stock for £5 per point, every 1 point movement you make £5 if it goes down. So in this case, it went from 229 to 168. So a 61 point movement would mean that this person made £305 because 61 times 5, 305. So that's £305 made from 61 point movement, as opposed to buying shares where you only make money off of a percentage change. This is nominal change times per point movement. But I'll go into this further later in another slide. But inversely, if you took a short position at £5 per point and the price went up, let's say it went up 61 points, you would lose £305 because for every 1 point it went up, you lose £5. So in this case, 61 points up would be 290, and you lose 61 times 5, which is £305. So there's a great profit potential in spread betting, but the loss potential can be quite great as well. So this is the slide a lot of people have been waiting for. What is the difference between spread betting and share dealing? So for people who don't know, share dealing just refers to the conventional way of buying and holding shares to grow upwards and increase in value. So this is buying shares, owning them, and then as they grow in price, you make money off of the price growth of shares, as opposed to spread betting, which I explained in the last slide. Now, the first difference between spread betting and share dealing is that spread betting, you do not own the underlying asset. You're betting against the movement of the price of that stock, but you do not actually own the stock. While with share dealings, you're actually buying a share of that stock, so you own the stock, and with that comes stuff like potentially voting rights and even dividend payments if the company offers dividend yield. With spread betting, you gain per point movement, as I explained in the last slide, but with share dealing, you gain in percentage growth. So if a stock increases its price from £100 to £110, the value of your investment will increase by 10%. It's all about percentage growth rather than point movement. So with spread betting, transaction charges are on the spread. So you can break even pretty quickly as the spread of most popular financial instruments are really tight. However, with share dealing, transaction charges are a nominal fee. So this could be anywhere between £8 and £20 per transaction. Now this is a big disadvantage for retail traders with small accounts, as this can really eat into your profits. This used to be a big issue, but it's not so much an issue now as the market's really shifting and there's a lot of zero commission trading apps and websites out there that won't charge anything, such as free trade. Then you have you pay no taxes on profits. Because spread betting is considered gambling, all your winnings are non-taxable. However, share dealing, you still pay tax on your profit, so you can pay up to 15% capital gains tax in the UK. I don't know what it is in other countries, but so whatever profit you make, you still have to pay 15% back to the government. This is a big issue for me. With spread betting, you can lose more than your initial stake. Yeah, as I showed you in that example in the last slide, the profit potential is very high, but you can also lose quite a lot as well if your trade goes in the opposite direction. But with share dealing, you can only lose the value of the stocks you've bought. So if you buy £1,000 worth of stocks, you can't lose anything more than £1,000. You can only lose what you've invested. Now, this wasn't always the case for spread betting, but with the ESMA regulations that come in place, this is actually the true for spread betting as well. You can't go into negative equity. You can only lose your initial investment. So I quickly made an edit to this because this used to be the case, but it's not the case anymore because of ESMA regulation. So unless you're a professional trader, you can't lose more than your initial stake for spread betting as well. Now, when it comes to leverage, spread betting allows leverage, which means that you can take positions that exceed the actual amount that's in your bank. I'll go through that in another slide in this Trading 101 series to really explain what leverage is all about. With share dealing, the gains are determined by the number of shares you bought. So if you buy £1,000 worth of shares and the share price of the stock that you bought goes up by 10%, then you'll make £100. But if you put 10,000 in, then you would have made £1,000. So what you gain is determined by how much shares you buy. And with spread betting, you can profit from price fall as well as price rise. But typically with share dealing, you can only benefit from price rising. Now, in certain situations, you can actually short sell with certain trading platforms, but I think there's a lot of stipulations that come with that. I think you have to have quite a lot of money before your trading platform will allow you to short sell. But with spread betting, there's no barriers to entry when it comes to shorting. You can short with a small account.